Are tariffs working? I don't know. I mean, if you want to talk about the politics of how they were used, it seemed very awkward and to really roil the markets. Ultimately, will they wind up being better for us? I don't know. How about the deal with tariffs on European goods that was just announced at 15%? Is that good for us? Does it make it good for us if you include that the EU also promised to invest $600 billion in our economy? The market's up. Unemployment is down. Inflation is stable-ish. But small businesses are borrowing. They seem stressed. There have been layoffs by many of the big companies, and people are saying the tariff hit hasn't come yet. I don't know. So I go to better minds, okay? Founder and Chief Investment Officer of Motum Capital. He's also my best friend, John McNiff. And a guy I really like and I pay attention to on Twitter, and I had him on the show, CEO and founder of Professional Capital Management, Anthony Pompliano. Anthony, it's good to have you back. Johnny, I love you. I really want to give the segment to you guys, okay? Just do me one favor, okay? Remember, you're talking to the mouth breather in the middle, all right? Keep it as, non-industry speak as you can. And I'll start with you, Anthony, about why you believe it's working. Keep it tight so Johnny can come right in and shape what you say.
Yeah, look, I think that, at the end of the day, these are pro-America policies. They're things that are done to protect American industry, to encourage economic activity, to incentivize investment in America, to create jobs, and to continue to push many industries from a technology and innovation standpoint forward. And I think what you're seeing is that people around the world want to access our market. They're willing to pay to be able to do that. And ultimately, you're seeing GDP growth. You're seeing inflation stay fairly stagnant. Unemployment is not accelerating at the rate that people would otherwise have predicted. And I think that the stock market continues to go higher. And so the market, which is the power of the crowd, is telling you they like this, and they think it's good for business.
Johnny?
Point, I feel like this is clearly a tax on the American people, and the revenue that is being created, and President Trump and Commerce Secretary Lutnick like to refer as money coming into the U.S. is being paid by the U.S. citizens, small businesses, corporations. So from that standpoint, it's economically harmful to the U.S. Also, from the structural standpoint, one of the reasons why I believe the U.S. has been one of the greatest markets in the world and is where free trade comes is because of how we're set up. And when you institute tariffs, you're essentially taking sand and throwing it in the engine. And it's going to take time for it to do the damage. And you're going to, I think, start to see that over the course of the next few quarters. And you've already started to see some little bit of percolations in terms of inflationary data. Particularly, this month, and I think that'll continue. And it's what the president or Powell from the sheriff said today after the Fed. And he's concerned, and that is his biggest concern, is the effect of the tariffs on inflation. And that is really going to be borne, as Chris, to your point, as you started this, on small businesses. Small businesses make up almost 50%. It's about 46% of employment. They are the ones that are going to have the hardest time navigating trade agreements and tariffs because they have more limited supply lines, and that is a bigger issue for them. Larger corporations, they have plants in different areas, so they can handle this in a more efficient manner and easier. But small businesses and the middle class, lower middle class, are going to be where the brunt of this, and that's where my concern is.
Anthony?
Well, I think that the government's inflation metric is just a joke at this point. CPI, they now are estimating 1/3 of the inputs to calculate it. Literally, they say, we don't know what the data is.
What does that mean? I don't know what that means.
They can't measure the data points, and so what they're doing is they're doing the best they can to estimate what those numbers are.
Historically, it was 10%, right? Anthony, now it's jumped to 35%. And that's largely also driven because of the Doge cuts.
Correct. So basically what ends up happening is 1/3 of all of the inputs to calculate inflation, they're essentially just making it up, right? They say guess, I say making it up. But also I think that if you look at real-time inflation metrics like Trueflation, which is a real-time alternative metric, they had inflation at 3% to start the year. It's now down to 2%. So it's been a 33% reduction in that inflation metric. And so I think that going back to this idea, if you go into a economics 101 class in any college pretty much in America, they'll tell you that tariffs are inflationary, that the consumer ends up actually paying for that tax, if you will. What I think, if we look at the actual data from 2018 tariffs and also what we've seen so far this year, is that actually that's not what happens. The prices of these goods go down over time rather than go up because we increase domestic production. And so one of the risks with doing kind of these blanket tariffs has been that actually you can't surgically apply a tariff. You're doing it on all goods, and America can't make everything. I always joke that we're not so good at making bananas and avocados, but we're pretty good at making some other things. And so there are some risks to the economic policy. What I think you saw in the GDP number is actually if Jerome Powell would cut interest rates, he would stop holding the economy back. We printed a 3% GDP growth number. If he had actually cut interest rates, we might have printed something that was closer to 4 or 4.5%.
So let's end on this. The rate cuts, Johnny, was that good or bad for the consumer? And what is your time horizon in terms of when you think we see the impact of the tariffs? And we'll leave it at that.
The market was pricing in that they would not cut, so I think from that was already predicted. For September is when you think the first rate cut will occur. That has actually shifted a little bit lower in terms of probabilities based on today. The consumer is always going to be better off with lower rates. So that from that standpoint, but that is not the mandate of the Fed. It's a dual mandate of price stability and low unemployment. And that's what they're trying to navigate. And that is where the rub is between President Trump saying just cut rates, lower it, it's just good for the economy, and their mandate as given to them by Congress. So for me, I do think you're going to already start to see some of this percolate. It's going to, the third and fourth quarters particularly, we'll really see that. I think you will pick up. And that's where the Fed, if inflation continues to stay by their metrics around 3%, that is a little too high. They want to get it lower to that 2% that was mentioned. So.
I got to say something, Johnny, Anthony, I understood almost everything you guys said here, which was way better than how I thought it was going to go. But I need to depend on the better minds, and you guys made it understandable. I'll get the audience feedback. I'd love to have dinner with both of you guys together, by the way. That would be a really interesting night for me. So I'm going to get it on the books as soon as I can. Anthony, Pompliano, hope the family and the babies are all good. Loved meeting your wife last time you were here. Johnny, I love you. Thank you for coming on short notice. Appreciate you both. Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.